How do I know when the risk is right? I make a lot of money and I sleep at night. And what that means is that if you don't over risk, don't over leverage, don't oversize your trades, when you go to sleep at night, if you leave your trades overnight, which swing traders often do, you won't sleep uneasily. You'll get a good rest, and that's very good for your psychology to start off with, a good night's sleep. How do I handle emotions and maintain discipline during trading? There's a very good song that I often listen to, and I think you should too. It's by the Trading Tribe and by Ed Seykota. I think it's called the Bluegrass, something in the Bluegrass Band. And the lyrics of the song, Ed Seykota, go and Google it, it's a fantastic song, The Trading Tribe, and it's called the Whipsaw Song. And one of the lyrics or lines in the song, I think it's in the chorus, it goes along the lines of, you make a lot of money and you sleep at night. Oh, the question was, how do I know when the risk is right? That's the lyric. How do I know when the risk is right? I make a lot of money and I sleep at night. And what that means is that if you don't over risk, don't over leverage, don't oversize your trades, when you go to sleep at night, if you leave your trades overnight, which swing traders often do, you won't sleep uneasily. You'll get a good rest, and that's very good for your psychology to start off with, a good night's sleep. But secondly, you'll know that your trade position, if it goes against you, if it hits your stop loss, which you'll probably have in if you've left your trade overnight, if it hits your stop loss, you might only be losing 1, 2, or 3% of your account, and not 30% of your account, or 60% of your account. So managing risk and managing emotions and your sleep actually all go hand in hand. Don't oversize, don't over leverage. Use tight stop losses, not too tight. There's a whole skill involved in stop losses too. You don't want to crowd your trade in and cram it in so that any move takes you out of the market. Your stop loss needs to be set in the right place. But don't oversize, use appropriate stop losses, use appropriate risk size for your account, which will be a few percent only, and make sure that when you go to sleep at night, you sleep peacefully, not worrying about drawdowns, not worrying about the 50% loss that you might incur in the morning, not worrying about how big this trade is and what is a disaster it might be to your finances and your family. And that's the best way to approach emotions. Now, if you view your trading account as purely money in, money out, pips and bips, and trade it like a business. In other words, every time you lose a few dollars, it doesn't bother you. It's an expense. It's a cost of trading. You're going to lose trades all the time. I lose about 30% of my trades. I win 70%. That sounds fantastic. But if you reverse it and say, well, I lose 30% of my trades, so, 1 in every 3, that's quite a lot. Not quite 1 in every 3, 1 in every 4 maybe, something like that. But just remember, you're going to lose trades and you're going to have to cover other costs as well, like paying for perhaps your charts and perhaps paying the spread on trades that you take, or commissions if you've got a commission account. So you're going to be losing trades and spending money on spreads and commission and other materials, charts, computers, software, whatever it is, all the time. Consider that to be a cost of trading, including the losing trades, and you want to keep your costs down in any business. You want to keep your costs as low as possible. That includes losing trades. You're not going to stop losing trades, nor am I. I'm going to carry on losing 30% of my trades, and that's at best. I could win on some occasions, some months, I might win or lose 50% of my trades. Just keep in mind that that's the cost of trading, and that's just part of being in this business. Your psychological approach to this should be there's money coming in, money going out. It's going to happen all day, every day, whenever you're trading. Some of it's going to be losses, some of it's going to be costs, and the money coming in is going to come from winning trades. What you have to be aware of is just a simple business, and sometimes it's quite a capital-intensive business. So, for example, if I've got $100,000 in my trading account, I might win and lose and trade volumes of hundreds of thousands of dollars over a month, but only end up with, let's say, $10,000 profit at the end of the month. And that $10,000 profit may have come from taking multiple trades, hundreds of thousands of dollars moving through my account, multiple losses on occasion within that 30% sort of rough bracket, and only end up with $10,000 profit at the end of the month. That's just the way trading is. It's a high volume, high risk business with a lot of capital flow going back and forth. Your job is to take the cream off the top of that. So how do you manage risk and how do you manage discipline and how do you manage emotions, all part of the same package. Don't oversize, don't over leverage, keep your stop losses reasonably tight, make sure you stick to your trading strategy. So just keep your disciplines, keep your corner tidy, as my wife likes to say. Keep everything in order, keep it smooth, keep it functioning, keep it efficient, make sure your risk is tightly managed. That's the most important part of your job as a trader, that's to manage your risk. Once you've managed your risk properly, once you understand the processes and systems involved in trading and managing risk, your psychology, your mental health, and your sleep will improve dramatically, and you won't even have to worry about it and think about it too much. I must emphasize that managing risk and managing your mental, I'm going to call it mental health, don't really like to use that term in this sense, but I think you know what I mean. Managing your risk, managing your mental stability, or a positive psychological outlook to trading is the most difficult and the most crucial part of trading. And until you master that, you're not going to do very well at your trading. So keep that in mind. It's really, really important.